G'day folks, welcome back to another update on US crude oil and the US dollar. Now both are looking out for a small bounce on both instruments. So we'll have a look at the charts in a second. Before we go there, make sure you hit that like and subscribe button to support the channel. First looking at the outlook. As of today, January 31st, US crude oil prices have risen slightly due to potential tariffs by President Trump on Canadian and Mexican imports, despite an overall weekly decline. The Energy Information Administration forecasts US crude production to reach a record 13.5 million barrels per day in 2025, contributing to a global supply increase of 1.8 million barrels per day. Concurrently, the US dollar remains strong, with the Fed Reserve pausing rate changes until mid-year and analysts cautioning against selling the currency prematurely. So first we look at the trends, obviously long term, so monthly, the weekly and the daily. Now on the monthly, it's been consolidating in this range since, pretty much 2023, a couple of years now. And it's actually, the CCI has actually broken into that moving average range. The price is still below its respective moving averages. So we may see further rises in the near term. Let's look out for that in the coming months. These indicators, by the way, are in a description below if you want to learn how to draw those on your own charting software. On the weekly, you can see there it's broken above the moving averages on the CCI. Likewise, the price, giving us a weekly bullish signal. And based on that, you can then trade on the daily. Remember, we always trade on a higher time frame. So if you're trading on the daily, we trade in the direction of the higher time frame on the weekly. So here, for example, you would have taken some long positions during that period when the CCI broke above the moving average, and likewise when the price did. And you would have closed it out when the CCI breaks into that moving average range. Now that entry there would have been a stop loss, but this one would have been a nice little return. You would have got in there, let me just draw you would have got in there when the CCI broke above, and also the price broke above the moving average, and you would have closed it out when the CCI broke into that moving average range on that candle, and that would have given you a just under 9% gain in 21 days, so not too bad a trade. At the moment, even though the weekly's bullish, you don't take any long trades because the daily is giving us a bearish signal. Now if we go to the intraday charts, if you're trading on the intraday, and I've got the 1 hour here, you can interchange this with your own time frame. We only take short entries because the daily is showing short positioning. Now, when you do look at these at all time frames, we also look at any divergence. So if I go back to the monthly, weekly and daily for a moment, I've just had a look here. There's no divergence that I could see on the monthly. There was no divergence on the weekly. There was a divergence here on the daily. Let me just zoom in on this one. You can see there are higher lows on the CCI versus slightly lower lows on the price, and it actually bounced. And what we do is we take it back to the recent high, and that's a minimum 23.38% Fibonacci retracement. So we go from that level back to that level there, and that's a 23.38% Fibonacci retracement. As a minimum, it hits. In this case, it hit the 38%, then it bounced back down towards that support level and bouncing higher. And since then, we haven't had any other divergence to talk about. So going back to the intraday charts, again, we only take short entries here, but notice here we've got a couple of, more recently, we had a bearish divergence here, lower highs on the CCI versus higher highs on the price. And if we drew a Fibonacci between that high and that significant low before the divergence started, that's at 23.38% level. Now, in this case, it fell right through there, and it's bouncing off near the 61% level. And you'll notice here as well, we've got another bullish divergence. This is a bullish divergence, higher lows on the CCI versus lower lows on the price. And if we take back the Fibonacci to that level, that's why I've drawn these target areas, at 23.38% level as a minimum. It hasn't hit that yet, so it most likely will hit that. More than 90% of the time it hits these minimum ranges. The CCI is still rising on the 1 hour time frame. Very likely it's going to get into this range. Now, it doesn't mean a full-scale reversal. It could mean it just hits this range and then bounces back to the downside. So I'll just keep an eye on that closely, and it gives you an indication where the daily and the larger time frames will head towards as well. So here we're looking at the US dollar. Again, on the monthly, we did have this bearish divergence, lower highs on the CCI. I think that was a very long-term bearish divergence. Of course, we wouldn't have seen that until this CCI back here declined from that area. So you wouldn't have really seen that happening, because up until that point, in fact, that might have been a bearish divergence as well. Notice there that price is that's slightly higher than that price. There's a bit of a liquidity sweep there, but that CCI is lower. So that was your first. I'll mark that actually and see what that did. So that was slightly higher than that point there, and that equated to that CCI dropping lower highs on the CCI versus slightly higher highs on the price. And again, what we do is we draw a Fibonacci. You take it back from that high. I like to take it back to significant low before the divergence started. You can see there it broke the 38% level very easily, and it actually went almost as far as the 61% before bouncing. So that was a closer term divergence there. But at the moment we've got a larger, longer term divergence, and I've marked the target there. You can see there, and that was also hit if it pull back the Fibonacci to that level. Actually, no, you would have gone back to that level there. That was a minimum rate. You notice there it's floated in that 38% for a number of years actually, before finally bouncing out of it. So it looks like it's actually completed that divergence as well, and now it's moving higher. So that's on the monthly. Bit of a long-winded exercise on monthly, which we don't often do, but we always look at these divergence on all time frames. So on the weekly, again, there's no divergence now to talk about, but notice the CCI is broken into that moving average range, giving us a neutral positioning. The price is still above its respective moving averages, but we'd call that a neutral, which means if you're trading on the daily, you avoid going long or short until we see more decisive movement above or below this moving average. Back here, for example, when that was going long, bullish on the CCI, you would have taken these long trades on the daily. Again, on the daily, we had a smaller range bullish divergence here versus lower lows on the price, hit our minimum target, and this one went well beyond 100% retrace level. There was a little bearish divergence back here, and at the moment, you'll notice here we've got another bearish divergence, lower highs on the CCI versus higher highs on the price. And again, to measure that with a Fibonacci, we take the high back to that recent low. And you can see there it broke very easily through that 38% level, and it actually bounced off that 61% and made a bounce from there. So that looks like it's possibly completed that divergence and might be going further up. So at the moment, it was bearish during that period, and at the moment it's broken into that moving average range on the daily, giving us a neutral positioning. So again, if we go to the intraday charts, avoid taking long or short trades on the intraday until we see this break either above that moving average range or below. As well, just another exercise here with the divergence. We've got a higher lows on the CCI versus lower lows on the price, and that also hit our minimum range. It fluctuated in that range for a while, a few hours, and finally looked like it possibly may break out of that. But again, we'll keep an eye on that. It could go either way. We have no crystal ball, but that just gives us probabilities of where the price may go at the moment. It looks like it's sort of heading still a bit further to the upside. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.